Hi, welcome to this presentation on IAS 7 cash flow. We're going to look at the adjustments for working capital, which goes in the top part here where we're looking to use our cash flow from operating activities to calculate our net cash from operating activities. Okay, so we've already covered in a previous video the adjustment for the non-cash expenses and non-cash incomes in the business. And we'll start now from operating cash flow before working capital changes, and we'll end this video at the net cash from the operating activities. Just some quick rules. An increase in current assets is a cash outflow. So if you imagine that you gave some extra people if you bought some extra inventory, obviously in purchasing that inventory, you would have had to spend cash. So if we increase our inventory, cash must have flown out of the business to increase the amount of cash. And similarly, if we decrease the amount of inventory and we sold it, then there would be effectively a cash inflow because of the money being received for selling that inventory. It's the opposite with liability. So imagine your trade payables are people who've really given you a free loan. If we increase our current liabilities, so if we increase our trade payables, then that means that effectively they've given us a free loan. The fact that we've used that loan to buy inventory, ignore for now. And similarly, if we decrease our current liabilities, the people that we owe money to, then that means that the business must have lost money. So that would be a cash outflow and it gets subtracted in the statement of cash flow. So a quick example of what we mean over here, we've got the comparison from the statement of financial position of the various elements within the current assets and current liabilities. And we will see that the inventory has increased. So that means that although the inventory has increased, we must have spent money to buy the inventory, and therefore that will be a decrease less the increase in the inventory of 10,000. Trade payables. Now the trade payables have decreased, and that means effectively overall there's been a net repayment of the money that we are owed by our customers of 20,000, and therefore that means that we've received more money from our customers than the actual money that they would have owed us just from the year's sales. So that would be to add the decrease in trade receivables of 20,000. And then over here on the other payables, we've also got a decrease of 5,000 in the other receivables. We've also got a decrease of 5,000. So again, we need to add that 5,000. Coming down to the current liabilities. Okay, current liabilities have decreased. So think of that as having had a loan from our suppliers of 70,000, and that loan is reduced down to 60,000. So we must have reduced the amount of cash in the business when we've paid that extra money, if you like, to the suppliers. So there's been a decrease in the trade payables of 10,000. So overall, the cash generated from operations of this business is £605,000. Not quite done though yet with the top part. And the other bit of the top part are the adjustments for both interest paid and the tax paid. So you've got your cash generated from the operations from the previous slide. I'll cover the tax paid first because that's always the easier one. Okay, the tax paid will normally be last year's tax. And the reason for that is we're looking at the actual cash outflow, and at year end, the business wouldn't have known that it owes the government £100,000 because it's yet to calculate its profit. So we pay tax. Businesses normally pay tax about 6 months after the year end. So the physical amount paid will be this 90,000. The bit that I do want to focus on just very, very briefly is how we calculated the interest paid. And here we've got 12,000 of accrued interest as an expense from last year. So that will have been paid last year. So I start with the 12,000 I would add on the 50,000 that I've got in my finance costs to give me 62,000. But 10,000 of that money I haven't yet paid because it's accrued interest. So the actual amount of interest paid for this business would be 52,000. And then it's just straightforward. Then we less the actual interest paid and the tax paid to give us our net cash from operating activities. Right, thank you very much. And for my students, I'll post you some work that goes along with this video.